Halima, great to have you. Love to start off with you on something Jim Cramer and I started off our show on. It's a conversation we've been having a lot, which is what, if anything, can the current administration do to convince oil companies to drill more that actually result in gas prices coming down in the near term? Or is that a fallacy in some way to believe that that conversation would actually bring about real action?
I mean, the problem is right now, I don't think there's very much on the supply side that can be done to bring prices down. We had the Secretary General of OPEC speaking at our conference yesterday. He essentially said the world is maxed out when it comes to spare capacity. We may have 2.5 million barrels globally. We are facing ever-growing Russian disruptions because of sanctions. And yes, U.S. production will grow, but it simply cannot fill the gap that we're looking at in terms of Russia, and it's not going to solve the problem of a shortage of refinery capacity.
Right. All right. Now, tell us more about the shortage of refinery capacity and what that is going to mean in terms of inventories in particular.
I mean, here's the issue. We have not had major refineries built in this country for decades. So when we think about the U.S. SPR release, we were having 1 million extra barrels coming on the market, but without the refineries able to basically produce the jet fuel, the gasoline, the all-important diesel, we continue to see these prices rise. And again, we are at alarmingly low levels for product inventories as we head into this summer driving season.
Halima, one of the other focuses of the conference you're at this week is what global spare capacity looks like. Is there anything governments can be doing now to boost that at this stage? I mean, it's not as simple as just turning a switch on and having more capacity, right? I mean, how long is the lag time to be able to do something like this?
I mean, Leslie, you're absolutely right. This is not a light switch situation. And one of the points that was made by the Secretary General of OPEC and the CEO of Eni this morning is we're dealing with years of underinvestment in the oil and gas sector. And so the kind of catch-up that is needed is not going to solve this near-term problem. We already were talking about Brent prices in the 90s before we had the Russian invasion of Ukraine. We're talking about one of the world's largest oil and gas exporters that's going to see huge volume disruption because of sanctions, particularly on the oil side.
Halima, the other thing we've been watching, both UAE and the EIA talking about the reopening of China, which on our air tends to get talked about in a dovish sense because supply chains loosen up. But what does happen to energy demand if, in fact, that they go back to, I don't know, say 60 or 80%?
Yeah. I mean, that is why UAE's oil minister was out this morning saying we have nowhere reached the peak in terms of oil prices. Because if you want to think about it, we already had triple-digit prices when China was basically locking down their major cities because of COVID restrictions. With the easing of those restrictions, the concern is we're going to have renewed Chinese demand at a moment where supply remains very constrained. So, again, your question that we started the show with was what can the Biden administration do on the supply side? Unfortunately, it looks like there's very little right now that can be done on the supply side. And the concern is as we head into this summer with the China reopening, prices could move materially higher.